Let me ask you this. How much do you fight with your family? Probably a lot. But here's the twist. No matter how many disagreements we have, at the end of the day, family always has our back. They've saved me from countless situations, from playing the best wing woman to hiding some questionable stuff from my parents. But did you know your family can not only save you from personal drama, but also from serious money problems? You might be thinking, why would I involve family in finances? Isn't that a disaster waiting to happen? Here's the thing. Most families in India rely on a single breadwinner since only 21% of women work. That's a recipe for financial strain. But what if your family could collectively help you save money and secure a better future? Stick around because I'll show you some tax-saving hacks that will transform how you plan finances with your family, and trust me, by the end of this video, you'll wonder why you didn't start sooner. Section 1. Leveraging senior citizens for tax benefits. Let's start with the unsung heroes of tax savings, our parents. Senior citizens have a basic exemption limit of 3 lakhs, and super senior citizens, those above 80 years, have 5 lakhs. Meanwhile, you only get an exemption limit of 2.5 lakhs. By planning your investments and tax liabilities together, your family can drastically cut down on taxable income. Confused? Don't worry, I'll break it down. For example, if you're in the 30% tax bracket and your parents are in a lower one, you can invest in their name. Here's the math. You have 10 lakh rupees. If you invested in your name at an FD rate of 6%, you'll earn 60,000 as interest income. But for senior citizens, the rate is 6.5%, which means they earn 65,000. Here's where it gets interesting. Your tax liability at 30% is 18,000, but their tax liability at 5% is just 750. You save over 17,000. That's enough to buy those Nike sneakers you've been eyeing. And the benefits don't stop here. Section 80 TDD allows senior citizens to claim a deduction of up to 50,000 for interest earned from savings accounts and deposits. Banks also offer an extra 0.5% interest for senior citizens. Why aren't you using these perks yet? Section 2. Maximize health insurance benefits now. Let's talk about health insurance. Did you know you can claim deductions for the premiums you pay for your parents' health insurance? Under Section 80D, you get a deduction of 25,000 for parents below 60 and 50,000 for senior citizens. Here's a quick example. Let's say your parents' combined premium is 43,000. Since it's within the limit, you can claim the entire amount as a deduction. That's not all. Under Section 80DDB, you can claim medical expenses up to 1 lakh for specified illnesses like cancer or Parkinson's. Think about it. Medical emergencies are unpredictable, but with proper planning, you can safeguard your family's health and your finances. Now, let's move to something even more interesting. Section 3. The HRA hack. Most of us live with our parents to save money on rent. But did you know that you can still claim HRA? Here's the hack. Pay rent to your parents and claim HRA. Yes, the rent will be taxable for them, but they can reduce their taxable income by claiming a 30% deduction on rental income under Section 24. For instance, you save tax through HRA, and your parents fall into a lower tax bracket, paying significantly less on their rental income. It's a win-win. But what if you're not a salaried person? Freelancers, pay attention because the next section is for you. Section 4. Section 80GG for freelancers. If you're a freelancer or business owner, you might think, I can't claim HRA, so I'm missing out. Wrong. Under Section 80GG, if you pay rent and don't own a house, you can still claim a deduction. Here's an example. If your annual income after deductions is 9 lakhs, claiming 80GG can reduce it to 8.4 lakhs, saving you 18,000 in taxes. Every rupee saved adds up, right? Section 5. Tax-free gifts from siblings. Speaking of family perks, did you know monetary gifts from siblings are tax-exempt? So next time you want something expensive, just convince your sibling to gift it. If you're a legal guardian to a sibling, you can also claim their education loan benefits under Section 80E. Imagine your sibling pursuing a degree at a prestigious university abroad. They won't have Indian income to claim deductions, but as a co-applicant, you can save taxes for up to 8 years. Section 6. Saving money with your spouse. Marriage isn't just about companionship. It's a financial power duo. If you're planning to buy a house, consider a joint home loan. Both spouses can claim deductions under Section 80C and 24B, doubling the tax benefits. For first-time borrowers, properties under 45 lakhs offer additional deductions of 1.5 lakh each under Section 80EA. Ladies, here's a bonus. Women often get lower interest rates on home loans. Who said being married doesn't come with financial perks? Section 7. Financial planning for children. Raising kids is expensive, but they come with their own set of tax benefits. You can invest in their name to save taxes, as their income will likely fall under a lower bracket. For example, investing 1 lakh in your child's name could save you from paying taxes on 10,000 earned interest. Plus, under Section 80C, tuition fees for up to 2 children are deductible. Now, if your child studies abroad, being a co-applicant on their education loan lets you claim deductions under Section 80E, just like with siblings. Section 8. The power of HUF, Hindu undivided family. Creating an HUF is like forming a mini tax entity. HUFs get their own PAN and can claim tax deductions separately. This means expenses like life insurance premiums or tuition fees can be claimed under the HUF, maximizing tax savings for the entire family. Let's say you've maxed out your deductions under Section 80C. Through your HUF, you can still claim more deductions for additional investments or insurance premiums. Bonus tip: floater health policies. A floater health policy covers your entire family under one sum insured, offering a cost-effective way to insure everyone. For example, instead of taking individual policies, a family of 4 can get a single floater policy for 20 lakhs at a lower premium. If you exhaust your Section 80D limit with a single floater policy, split it into 2 policies for maximum deductions. Conclusion: the family that plans together stays together. So, here's the takeaway. Family is your ultimate financial ally. By planning finances collectively, you unlock a world of tax benefits and financial freedom. Stop those petty sibling fights, start discussing money, and build a wealthy future together. If you found this video helpful, don't forget to like, subscribe, and hit the bell icon. We'll see you in the next one. Until then, happy saving.